started, I think. So again, welcome everyone to another exclusive Apollo webinar. Great to have you all here. As some of you may know, my name is Jamie. I'm a commercial strategist at Hyper. Today, I'm fortunate to be joined by Eduardo Canizo, a senior associate at Seedrs, focusing on driving startup investment and growth. So great to have you here, Eduardo. So,
thanks, Jamie.
Yeah, Eduardo, I think we could just start by if you could explain a little bit about your role at Seedrs and kind of what's brought you to where you are today.
Sure. So, hey guys, I'm Eduardo. Jamie, again, thank you for having me. I've been working the past 6 to 8 years in the startup world. I'm originally from South America, from Venezuela, and been living in London, UK for the past 10 years. So 3 years in Seedrs now. Seedrs is the largest sort of like private investment platform in the world. Now the parent company is Republic, which is the same thing, but in the US. They acquired us about 3 years ago, 2 to 3 years ago. And what I do at Seedrs, I sort of like help businesses and founders raise capital in the platform, as simple as that. And it's coming from, looking for startups, networking with founders, helping them and advising them along the way or the journey about raising funds, and then sort of like structuring rounds on our platform for these founders to raise some of their round through us as well.
Okay, no, brilliant. I mean, I think we could share obviously that we both work, I guess, in a similar industry, and it's really invigorating, meeting all these different founders working on different things. Kind of you can feed off the energy that they all have and the passion for, trying to fix the problems that they're trying to fix. And obviously Hyper's had a few ventures that have been able to raise through Seedrs. Just to name a few, we had a Bundle, which is kind of like a baby product marketplace. We had Strabo, which is like an investment portfolio tracker, and Gratitude, which allows their users to kind of subscribe and donate to environmental conservation and social projects. So yeah, I mean, thanks for introducing yourself, Eduardo, and obviously giving us a little context into the work you're doing with Seedrs. But it would be good to start with, I think, understanding a little bit more into like the various investment opportunities available to founders through Seedrs. So again, a little bit of background. Seedrs is obviously a leading crowd equity raising platform in the UK, and they've been there for obviously a number of years now. I know you guys cater to startups seeking investment, obviously, but can you elaborate on the kind of different investment options or like opportunities Seedrs offers? Maybe we could start with like those regular equity campaigns.
Yeah, sure. So there's different things that we can do. Obviously, our main thing, and which is how we started, is equity crowdfunding. Which is the whole ethos and mission is about democratizing access to private companies and letting individuals invest in startups as little as £10 of investment. So that's the whole mission and vision. But as we grew and 14 years has passed, and we have sort of like become more of a complete private investment platform, offering more products and becoming a whole private investment ecosystem. So we can also do cap table managements for those businesses who are more into Series A, Series B, Series C. We help businesses clean up their cap tables, because having a clean cap table is really, really important in terms of administration and management of those investors. We also do secondaries. Secondaries is an interesting product. We can, if there's early shareholders of a business that would like to sell some of their shares in exchange of in exchange of cash and liquidity, we can do that as well. This is again more for Series B, Series C businesses that are already more popular, more known, let's say, in the investment world and the startup world, and is shareholders who want to make a quick exit. We also have a secondary marketplace, so Seedrs investors can actually trade shares within each other without the need of waiting for an IPO or an exit. Seedrs investors can actually exit early on. So again, is trying to incentivize this or build this infrastructure for private investment pre-IPO that hasn't existed before.
Amazing. So yeah, a lot of benefits on kind of both sides of the coin there for the investors and for the founders and their ventures. One in particular that's kind of come up quite a lot recently on our end is some of our founders exploring raising via an ASA. Can you explain a little bit, first of all, what an ASA is and how Seedrs kind of facilitates these kind of campaigns and what advantages they have for startups in that specific stage?
Yeah, sure. So ASA is sort of like the same as convertible loan. It's just a different way of raising funds. Rather than putting a valuation at this moment in time, they're putting a valuation in 6 month time or 12-month time, and they're getting the cash now. And the investors will actually convert to their shares into equity in 6 or 12 months time. Just it's a good way to raise funds now without putting a price on it, because sometimes it's difficult just to understand what valuation do you have now, because it's an early business, or that there's certain accomplishments that you'll have in 3 to 6 months if you get some money now. So it's just a different way, and we can work with ASAs and with convertible loans. Normally the terms have a discount because you're getting the cash at this moment in time. So it's just a different tool, and we see that maybe 20% of the deals that we structure in the platform are ASAs, and we work with around 300 businesses, 300 rounds per year. So yeah, definitely is something that we see and something that we can work with.
Interesting. And you said around 20%. Is that kind of growing quite rapidly, or have you seen kind of some trends in terms of a lot more ventures opting for an ASA?
It depends. Haven't seen an increase in particular, but it's just it's another tool, right? Most rounds are going to be price rounds, but yeah, we also see that some businesses prefer raising in an ASA.
Right. Okay. Well, so yeah, you were touching on kind of the different options that you have on the investor side, and I do want to go more into the profiles of the investors that you guys work with. But I'm first of all curious around what role Seedrs takes as an investor and how you guys participate in that process.
Yes. So in a round, there's different investors, institutional investors that will participate. Normally, you'll have a round that can be fulfilled by a VC, a couple of angels, and then maybe other private investors, family offices, high net worth individuals. We also, as an equity crowdfunding platform, will participate for an allocation. But we don't lead rounds, so we act as a follow-on investor, mainly as the last tranche of investment or as an add-on, depending on the stage of the business sector. There's different ways we can participate. Normally, is as a follow-on investor. So the way we work is that a round is being raised or has already been raised, and we will sort of like plug in on the back of that round to raise additional capital, and do it quickly and efficiently. And yeah, it's just works good as a way to complete or extend rounds.
Okay. And it's interesting, I know obviously a big, I guess, concern or anxiety for founders is how they're going to raise capital, right? And where they're going to find that, how they're going to connect with investors, right? And I think some people think that these investors are always really well-established angels that have, invested in a number of companies. And obviously that is the case in a lot of scenarios. But can you tell me a little bit more about the investors you guys have in your database and what kind of their profiles are, I guess?
Sure. So what's happening is that Seedrs is becoming more and more popular. And what that means is that our user base or investor base is increasing and increasing. And many other platforms are out there as well, building community of investors. What we're excelling is retail investor base. So retail is smaller ticket sizes, but what we do is we accumulate a lot of them in order to become sort of like a big check size. those retail investors are normally people within financial backgrounds, people that are owners of businesses, CEOs of other companies, and they like to write small checks into startups that they resonate with. And they use our platform to find interesting startups, interesting businesses for them to invest in. And they use us to manage their portfolio of investments. So the Seedrs platform as a investor-led platform is a great way to start your angel journey.
Mhm.
Even if you're a founder, if you're a CEO and you resonate with the business, you might not invest 100K, but you might invest 2K, 3K, 5K, 10K tickets. And we're the perfect platform to do so because we give everything to investors to invest quickly and effectively, even if it's through a debit card or credit card. And we offer founders a quick and efficient way to present their investment proposition to investors. So it's an interesting way that has become more and more popular, and we're a heavily regulated entity by the FCA. So it's really cool to see, and we have around 1 million investors registered in our platform and 3 million globally, including in the US, in Asia, and UK and Europe.
Is that 1 million in the UK?
1 million in UK and Europe.
Wow, amazing. And yeah, obviously with those different kind of ticket sizes, I guess it does bring about a lot of different profiles, right? And again, another kind of, I guess, open-ended question in some regards. But what would be like a typical timeline for a venture raise on Seedrs?
So the Seedrs side of things is about 2 to 3 months from start to finish. It's about 1 month to prepare the narrative of the campaign, the investment proposal, and then 30 days more or less to execute it. We have a start line and a deadline, and it works best like that to put pressure in our investors to invest quickly. So and then it takes about a week or so to transfer the funds to the business bank account. Normally, a fundraising journey from start to finish is about 6 to 12 months. From the moment you open the round and you start looking for lead investors, and then we come at the back of that in a time frame of 2 months, more or less, 2 to 3 months.
Okay, I mean that's it's pretty efficient timeline, because obviously a lot of this early stage process is really about maintaining that momentum, right, and not getting too stalled up.
Exactly.
So I mean that's obviously
having a start line and a deadline. I think it resonates pretty much with founders, because they want to make sure that the round is not open forever and that we can put as much people as possible, and deadlines help to put pressure again.
Of course,
into
yeah.
investors to invest.
And I mean, throughout this journey, even from starting with an idea to getting to Series A, Series B, it's important to have those timelines. But things rarely go according to plan. So it's nice to have some structure, though, of course. So obviously, there's again a huge kind of profile of different ventures that you guys kind of support, right? So at what stage would you believe raising funded equity for your startup and would be the most effective, whether that's pre-seed or seed or Series A? Or
So it depends. It's very much on a case-by-case basis. We work with businesses across all stages and across all sectors. Everything from pre-seed up to pre-IPO, really, up to IPO. And we work differently with businesses at the different stages, and we add value in a different way to different businesses at the different stages, because equity crowdfunding is not just about raising funds. There can be many other benefits or many other reasons why a business would like to crowdfund. As an example, we did a raise for a company called Revolut. Many of you might have heard of them. It's one of the biggest fintech banks in the world, and they just wanted to open access to their business, to their customer base, not to just raise funds, but to build a community of and a loyalty within their customer base, and offering shares to their customer base in exchange of investment. So they wanted just to build that community of shareholders that that are loyal to the business. So that's one of the reasons. Maybe other ones, it could be a little bit of brand awareness and extend their presence of within the retail investor base, and they just perform an equity crowdfunding to to do that, extend that, get some brand awareness, some marketing, and refine the marketing communications. So it just depends. I guess when it comes to early stage businesses, seed stage or pre-seed, we also act as an infrastructure or an investor portal to help businesses get or manage all of their friends and family and LinkedIn connections and drive investment through that, and then use our investor base to jump on the back of that. And we handle all the administration, we handle all the legalities that come with raising a round. So it's like a full equipped wrapper of helping businesses raise funds, particularly for that pre-seed stage.
Okay. Okay, interesting. And I mean, you mentioned Revolut there, obviously in the fintech kind of digital bank space. Have you noticed any like industry specific ventures that have seen, I guess, the most success, or any trends there?
It changes from year to year. I think fintech has been consistent. We also have seen good attraction from prop tech businesses or insure tech businesses, health tech. Recently, climate tech has sort of like climate tech has become a boom in not just in the platform, but in overall global investment. And there's a huge appetite for climate tech businesses at this moment in time. Everything that has a strong sustainable impact angle to their narrative, it's strong. Before we were more focusing on B2C type of companies. Now our investors want to see more B2B complex technologies, which we recently raised for a company called Green Lithium, which is a UK lithium refinery. We raised £3 million for them, a little bit more. Hydrogen generation business, carbon removal businesses. So it's EV chargers. It's very, very interesting to see that our investors are looking for different types of companies as well. AI is a big trend overall, and what we've seen is that what is trending in the overall market will be trending in the platform as well. But some industries remain there or maintain their constant
Right.
like fintech.
Yeah, no, I think that makes sense. And I think obviously to a lot of investors, especially in the early stages, they want to invest in ventures that they have a good understanding of that market, right? So I guess that does make sense. And having such a large database of investors, I guess you do see those kind of market trends matching the trends on Seedrs and the raises there. So I mean, going maybe into some of those climate tech companies that you mentioned, can you name a couple specific strategies maybe that those founders or those ventures kind of deployed that contributed to their successful raise?
Yeah, I guess they like complementing their PR efforts with the crowdfunding campaign. So anything like BBC articles that they appear in, we can leverage that on the crowdfunding campaign platform. So things like that help. Also, we have a discussion forum for any investor to ask any questions, where those founders are really active in those discussion forums, and they're really engaging with the investors and writing very thorough and detailed answers into the discussion forum to make sure that they build this good credibility within the platform. So it's about engaging and perhaps complementing PR efforts with the overall crowdfunding marketing activities that we perform.
Okay. I guess that makes a lot of sense. And we at Hyper, we always kind of encourage the founders to be really proactive, right? And take that ownership over their own success, right? And I think a lot of that is being engaged, really keeping their audience up to date with what they're doing.
Definitely.
And so they can kind of follow on the journey, right? Feel like they're part of it. So just before, I just wanted to touch on again the audience. I've seen a couple questions come through from Marcus, but guys, keep throwing a couple questions in there, and we'll address those towards the end of the session. But Eduardo, I wanted to kind of go like beyond the fundraising side of things on Seedrs, from Seedrs, and how you guys kind of support ventures. So can you elaborate on some of that additional support that you guys offer? And we can start on kind of the valuation and the due diligence tools that you guys have.
Sure. So additional support, you mean in exposing the business to our investor base, or um, we do a lot of different things. So we help
Hmm.
businesses um, with the pitch deck as well, giving
Yeah.
them feedback. We help businesses to refine their communication strategy, so that we can make sure that we're presenting a concise and easy to digest narrative to
Hmm.
not just investors but their customers as well. Um, we, in particular, when we are presenting investment propositions to our investor base, we try different multi-touch points. So we can do digital ads, we can do email marketing campaigns, target and retarget our investor base. So many things complement the crowdfunding campaign, and businesses see us as a good exercise to
Mm.
again refine their marketing communications, because we audit that. um, and we try to, uh, on your point in the due diligence, every claim that a founder or a business makes, we need evidence to back that claim.
Yeah.
So it's a good way to get things very organized, because we audit that and we help with
Mhm.
that. So again, besides just raising funds, it's a great way to organize yourself as a business and making sure that we're presenting a nice and cohesive narrative.
Mhm. Yeah, no, I think that makes sense. And I think it would make sense that, your investors are expecting a certain kind of amount of information and due diligence having been done and be available for each of the ventures. So that's really interesting. And then going back to, you touched on it earlier, Eduardo, in terms of some of the work you guys are doing in the secondary markets, and then also relating that to then, the cap table management and the tokenization things. Can you touch on those topics a little bit more?
Sure. So we have different. Now we have become so big that we have different universes, let's say, within the company. We are also have a sort of like a consultory, if I can say
Mhm.
like that, or uh, a service, if for Web3 companies,
Mhm.
for doing from the economic design of the token and the coin up to the distribution of the coin. We can advise on that, and we can help businesses build coins and tokens. We can offer utility tokenizations,
Mhm.
real world asset tokenizations as well. So we're getting into that space as well, and we have experts working in that space. I particularly still work in the normal price rounds and equity crowdfunding, um, and we also can do share drops,
Mhm.
which is a new product that we're rolling out. And share drops means that you can offer shares, but instead of in exchange of investment, you can offer shares in exchange of actions that your customers do within your app or within your
Mhm.
platform. If you collect data from your customers as a founder, and as a business, in exchange of that data, you can offer shares, and those individuals can use our platform to redeem those shares, or even exchange those shares with other Seedrs investors who are looking to invest in that business. So, just very cool things that we're doing.
Yeah, so it's not just the investment that they can that founders can benefit from. It's also, the increasing the traction and their user group, user base. So
Exactly.
yeah.
It's all about building a strong and loyal community nowadays,
Hmm.
because there's so many businesses and so much saturation that it's more about building a strong community and a strong loyal customer base, which shares can be a good option to help
Right.
you achieve that.
Right. Okay. So say ventures kind of come to the end of their race on Seedrs. What kind of so going more into the post kind of campaign support, how does Seedrs kind of continue to support startups after a successful campaign? Like maybe within maintaining investor relations or,
Yeah,
navigating some of those, growth challenges.
yeah. So and just to give a little bit more context, like
Mm.
the way we work is that like business might get hundred or thousands of micro investors through our platform, but
Hmm.
the business will have only one shareholder under the cap table, which is Seedrs Nominee Limited, and we will sort of like represent the hundreds of investors that might come, and we manage all the administration from KYC to issuing share certificates, issuing tax relief, and all the post management that comes with it at no cost at all. So from managing preemption rights to information rights, voting rights, because we have to offer those basic investment rights to these investors. So we take care of all of that, and post management
Hmm.
and information rights. So businesses and founders can actually share updates to those investors through our platform on a quarterly basis, and it can be basic updates. And we can provide all of those we can facilitate all of that.
Interesting. And kind of an interesting one here. I mean, and something that comes up quite often with first-time founders at very early stages where they're still learning quite a lot. Have you noticed any kind of trends or common mistakes that a lot of investors have? A lot of founders have around crowd equity raising, or misconceptions maybe?
Couple of them, maybe. I mean, again, it's about being as a founder, being as much as engaged as possible with the campaign, pushing this out to your network, pushing this out to your customer base, responding to the questions in the discussion forum, inviting people to participate. It's about being engaged with the campaign, even though we try our process to be smooth and not to distract you from your operating day-to-day activities. We want you to be as much engaged as possible. Some founders think just because you list the business in the platform, there will be showers of cash, and it's not like that. There's a level of effort that is involved with this, as much as bringing capital from institutional investors can be very it requires a lot of effort. So yeah, it's about being engaged. And then another one I would say is that some businesses some businesses rely on equity crowdfunding for survival as a business. So I wouldn't use equity crowdfunding if you have less than 6 months of runway of the company or something like that, because equity crowdfunding works, but it's not a guarantee, and we don't know how much we can raise until we push you out there in front of investors and understand the appetite of our investor base. So I think businesses shouldn't use equity crowdfunding if they need cash straight away for survival, let's say.
Okay. So yeah, I mean, Eduardo, we could start to raise some of these questions that we're getting in the chat here. And Marcus Jones was asking,
let's do it.
Quite an open-ended question here, I think. But if someone were to invest a small amount, let's say £10, what would they realistically expect to get on their return? And would that be purely down to the venture that they pick and how they go going forward, or what would you say on that?
Yeah, I mean, it depends on the exit and the multiples that they can get. I guess, I mean, the average ticket size that we get in the platform is around £1,000 per ticket per investor. You have the option of investing £10, but I guess the £10 tickets that we see in our platform is business customers that want to be a little bit more attached with the company and want to get more of an insight of different things. They want to get rewards and discounts, and they just invest to become a shareholder, to be a little bit more closer to the business, and get some rewards just for being a shareholder. Which, as a founder, we can be creative and work together to see what sort of like rewards and benefits we can give to the shareholders. Access to meetings, parties, invites, things like that. But if you really want to make a good return on investment, or I guess those are those checks will be coming from more sophisticated investor base in our platform, which we have. And again, the average ticket size is about £1,000. So, well, maybe it depends, but we've seen 5x returns, 10x returns. We've seen checks of 50K coming through the platform, even 100K coming from the platform. So.
Yeah, again, I guess very, very case by case, but I mean, it's great that, there's so many options, right, for so many different profiles. So, I mean, so Satisha was wondering around, I guess, more of the Seedrs commercial model, right? And in terms of like maybe the funds required or the fees that a venture would maybe need to pay in order to raise and to get the proposal up there. And I guess, could you walk us through about how they would go about doing that and what's involved?
Yeah, so obviously we take a commission of what is raised through the platform, success base, which is normally around 6%. Mm-hmm. We also have a minimum fee of around £12,000. Is what it takes us to operate this campaign, and it really competes with other sources of fees from other investors, really. And again, those fees, this is not an easy thing to achieve. We need to do KYC on those investors. We need to prepare a campaign narrative. There's several salaries that comes into place. So it can be an expensive process, but again, we try to make it work. And our fees are normally deducted from what the business raised at the end of the campaign. Let's say, you would definitely take a commission fee, but we don't take equity in the business.
Okay. And again, another bit of a challenging question here for your daughter from Georgina, in terms of a venture at pre-seed stage with little traction and pre-revenue, but they have advanced assurances, business plans, pitch decks, those kind of assets. How successful, or what kind of success rate might they be looking at for being able to raise, particularly maybe on the app or SaaS side of things?
It depends. Like, we're very exclusive with the businesses that we work with. It's for pre-seed, people will bet on the founders' background, the founders themselves, more than the idea, let's say. So, I mean, we receive tens of thousands of applications, maybe 30,000, 40,000 of applications per year from businesses that want to raise on Seedrs. Right. And we only work with hundreds of them. So last year we worked with 295 businesses. So it's a particular business that we want to work with, and like across all sectors in all stages, we have a 90% success rate, so 90% success rate. So we have a process that works and a formula that works, that we have developed and make better year after year. But yeah, it works for particular businesses, not for all. And my job is to identify who are those startups and businesses.
Okay. And again, another quite a tough one here, Eduardo, in terms of the average return on investment for investors on your platform. I mean, obviously there's probably a massive spread here, but would you know kind of some average numbers there in terms?
We did a report. We did a report in December, which is on my LinkedIn. I can share that to anyone who would like to see that report. I think it was an 18% IRR. And the reason is quite a good return is because investors can diversify so much on their investments within the platform. We see some people that have 100 investments. Again, we work with so many. We have 2,000 businesses in our portfolio of investments. So it seems that diversification helped with that return. And this is on average. But for more details and for more specifics, feel free to DM me on LinkedIn. I can share that report with you.
Yeah, no, I think that's a good way to go about it. And obviously we'll be sharing your contact information. And obviously this session has been recorded for people to reference back to. But yeah, I mean, Eduardo, thank you for your time today. I think some really good value add for founders, and hopefully we continue to see some really exciting raises through Seedrs, particularly from Hyper Ventures, just biasly from my end. But yeah, obviously, as I said to everyone still listening, we'll be sharing the recording and Eduardo's contact details if you want to reach out to him about some of those more specifics about how to get signed up with Seedrs and what's involved on that end. But thanks again, and I'm sure we'll speak again soon. Cheers. Bye.
Bye, guys. Bye, Jamie. Thank you.